Good morning. It's Wednesday, April 2nd, Liberation Day, the day we've all been waiting for here. So thanks for joining me. I'm Philip Streible, Chief Market Strategist at Blue Line Futures. So the world and the markets are on edge. President Trump will announce his reciprocal tariffs at 3 p.m. Central Time. Expectations are to see an increase in market volatility and a deepening slide in the S&P 500. So many of the banks, the large financial institutions, revised down their year-to-date end targets, and then also the expectations of what they see as the floor on the S&P 500. The concerns are that the impact will cut corporate earnings and destabilize company supply chains. This comes after the worst quarter in equities seen since 2022. The net selling in global stocks by hedge funds in March was the largest in 12 years. That's why seemingly last month it seemed like there was no bid in the market for several straight days. So looking at the equities in a data check overnight, because we are sliding and making new lows. Now coming into when I was doing the research for this, the discussion was just mainly around Trump and the tariffs. So US equities were only slightly lower. The acceleration happened when news broke that China said it would restrict companies from investing in the US. And that's why we have this deepening slide here. And I believe we're hitting some stop loss selling and some reduction and some risk off ahead of what is to unfold throughout the day. Now looking at the oil market, oil pulling back just a bit, down about 0.5% at 70.87. I think crude oil is taking kind of a wait and see approach to see what happens here with these tariffs, because the tariffs could impact prices and growth. And after the recent rise here, we've got some conflicting drivers such as sanctions, OPEC production, inventory levels, all affecting the markets here. So if you're working with me closely, I've been reducing oil positions after getting long in those mid 60s and even looking at some defensive bearish positions here via put spreads and things like that if clients are overweighted in that oil market. So let's look at some of the strongest markets that we're seeing here overnight, and we're adding a few to the list here. So we do have gold, which was down slightly yesterday. Chart pattern slightly suspicious, kind of getting out if you get the chart back above that top end of the trend line, and a lot of times we revert back to the mean. So I was a little surprised that we see the sell-off and prices going back up overnight. So it's a lot of the uncertainty, it's a lot of foreign buying that's occurring. So one thing to note, and you should realize this, is that when it's not only the price action we see, it's not only the volatility in the market, it's not only the volume in the market, but it's also the when did it occur. Did it occur around, say, some economic data release? Is it occurring at the end of the day, the beginning of the day? Well, most of gold's all-time highs have occurred in the overnight session, and that's where you see some of the foreign buying come into place. So China's really been an active buyer in the market and in the Chinese, in the gold market, the silver market, the precious metals, and things like that. So gold is your best performing commodity here as far as year to date. Feeder cattle, live cattle, and then those bonds. People are really looking for safety. We've seen the 5-year, the 10-year, the 30-year all pushing up here. And then the Bloomberg Commodity Index. A lot of people going into that, looking at the tariffs to cause a general rise in inflation across the board and all together here. So overnight price action, gold climbed towards that record high. You look at the June gold contract, 31.77. is that contract high. We're sitting at about 31.51 last, and that's right around the pivot point here. The pivot point is kind of my bull bear gauge as far as on the day. Are we opening up above it? Are we opening up below it? If we're opening up below it, what are the support levels I'm looking at? What are the stop loss placements I'm going to take? If we open above it, where do you trim positions at? Where are your targets at? Things like that. That's what's going on in my head here. So I'll look at the price action. And something as a side note, when you get a volatile event like this, when you get all the emotions are laid out on the table, I feel like we're at the Super Bowl, we're at the final World Series of Poker hand, it's generally not a day where you want to make irrational decisions trading in the market. So frankly, if you were to sit here on the side next to me and look at what's going on through the day, I'm going to set some boundaries for myself. I'm going to say, okay, if we're going to trade, we're probably going to be in a trade for a short-term period of time, unless we get a dramatic washout prior to it where I feel like we've reached a value zone or something has truly gone on sale, or I'm going to sit back and relax and make sure that I've got hedges in place and things like that. That's just the way that I trade, and I've done this for 25 years as far as a licensed futures commodity broker. So looking at the overnight resistance and support, the problem is when you get these volatile events like this that are occurring, typical volatility that occurs. Now, we've seen volatility increase as we've been coming up in this day. So naturally, my tactical ranges will widen out and adjust for that. But what they won't adjust for is when you get this specific date the event occurs. So that's where I'll start looking at resistance 3, resist support 3, and things like that as possible entries and exits. But realistically, what's gold? $40 a day average true range. We've seen about a $32 average true range already here happen today, but it wouldn't surprise me if we didn't see $50, $60, even $80 as far as the range throughout the day. Silver's range has been about 80 cents per day. Wouldn't surprise me if we saw a $1.30, $1.50 move in some direction today, whether it's from the high to the low or straight up or straight down. So generally, I don't put together a solid concrete plan because of that. It's like we're seeing a hurricane coming. We're not going to be laying out at the beach all day. This plan is not going to take place here. We need to make other arrangements here and get defensive. So as far as gold, central bankers, they are expressing some caution here, not in the gold prices. And they're saying that tariffs could raise both inflation and unemployment. That's actually a perfect storm for the gold market. That was one headline that I grabbed. Some other headline that I grabbed, and this may trigger some people out there, and it's just a bullet. The cure for high prices is what? A client told me this yesterday. High prices. If you look at U.S. Mint gold coin sales, they fell 17% in March from the prior month. So some people could be offloading some of those coins, although I find it very cumbersome to do. And you really got to know what you're talking about and what you're looking at here if you're going to offload those things. But the reality is I think that people are looking for alternative means to get involved with the precious metals, whether it's through ETFs, whether it's through futures contracts. And that's why I believe that the CME has done a great job by launching smaller denomination products here as far as 1,000-ounce silver. And then I've been lobbying them for a 100-ounce silver contract. And then they've also got the 10-ounce and the 1-ounce on the gold. Now, looking at the ETF flows from the previous trading session, exchange traded funds, they added 33,000 troy ounces of gold the previous session. Third straight day of growth. Same thing with the silver market, third straight day of growth. So the ETFs added about 170,000 ounces of silver to their holdings in the last session. Where does it take us up year to date? Well, 6.2%. So that's the highest level I've seen all year on the gold market. Silver up 0.5%. And the gold-silver ratio, people won't like this, 91 to 1. Yesterday it did get to about 92 to 1 at one point. So some key events that we're going to have here today. Obviously, everyone's going to be watching Trump at 3 p.m. here. So, funny, I watch my daughter at 3 p.m. That's when I take over. So she's going to be watching the markets and Trump full hand. So maybe I'll do a live stream there. So we'll see what happens. But we've got the mortgage applications, ADP employment, factory orders, and durable goods coming up. ADP, that is the precursor to the jobs data that comes out on Friday, is expected to see an increase of 119,000 in the private sector employment after a 77,000 employment gain in February. So a better number there might see a little of a relief rally in the equity markets, but I believe that it would be short-lived. We're going to have one Fed governor speaking here today, and then we've got one auction here as far as what's going on in the Treasury bills, but it's not very relevant. So you guys got any questions? My suggestion is be defensive, think about your trades, have your exit, have your entry, have things all planned out. Remember, plan your trade, trade your plan. That's what I always say. So any questions, give us a call here. If you need anything, shoot an email to info@BlueLineFutures. And then also remember, futures and option trading does involve risk of loss. May not be suitable to all investors. Good luck, good trading.